We've been searching for the holy grail trading strategy. Well, this is the closest you're ever going to get. This video should be the only freaking tutorial you ever need. I'm not exaggerating. If you can't follow the logic presented here, you're never going to be profitable. This is it. So listen carefully. And here we go. I post under the handle ICT on X, and this is it. This is the model. There are two kinds of markets: trending markets and consolidating markets. The only way you can be profitable is if you know how to trade trending markets. And a trending market doesn't necessarily mean it's going to keep going in the clean high highs and high lows without taking out lows ever. A trending market will on occasion go down to take stops. It will give you the false impression that it's breaking out towards the other side and reversing, but after taking the stops, it will continue in the direction it started in. Your job as a trader or an analyst is to identify the existing trend. The prevailing trend determines your trading bias. There's only one session you need to be trading. That is the New York AM session. Every other session is going to be too tedious for you to worry about, especially if you're a beginner or if you're not profitable yet. This is it. So please pay attention. A prevailing trend can be bullish, like here, where it makes higher highs, higher lows, and so on and so forth, or it could be bearish, lower highs, lower lows, and so on and so forth. How you become a part of this trend is you wait for a stop hunt at a specific time of day. If you're paying attention to the bottom here, this is the x-axis of the chart. This is a schematic. I'll show you a real chart as well, so be a little more patient. We'll get there. This is a very important time, 8:30. There's a vertical line here. History market, the Fed wire. Almost every day at 8:30 a.m., there is some kind of volatility injection. Either there's a red folder news release or an orange folder news release. Beyond that, we have the 9:30 futures open somewhere over here. Before that, if you can find a prevailing trend of higher highs and higher lows, you need to be marking out the clear swing low, the nearest swing low, and wait for price to purge the lows. Once the lows are purged, you go into a lower time frame. You observe this on a 15-minute or a 5-minute time frame. The trend needs to be in a 15-minute or a 5-minute time frame, as it's stated over here in this chart. When you go down to a lower time frame, preferably after 9:30 in the morning, preferably after 9:30, especially if you're trading the futures contracts on NQ or ES. For FX, the timing will be slightly different, but here we are. If you're trading inside a bullish market, you wait for one of the swing lows, preferably the nearest swing low on a 15-minute or a 5-minute chart to get purged right after 9:30 a.m. futures open, where there's a volatility injection. A volatility injection is where the large players in the market who are controlling things, let's just go into the conspiracy. Let's assume that the market is controlled. They move price around to displace those who are already long in order to get a large position filled in to be part of the uptrend. Similarly, in a downtrend on a 15-minute or a 5-minute chart, if you find clean lower highs and lower lows, you wait for one of these nearest highs to get purged somewhere after 9:30 in the morning where futures open takes place. It is preferable you wait for 9:30 open. Otherwise, the markets can be a little bit choppy, especially if you're trading the Nasdaq or the S&P 500 futures. So around 9:30, you wait from 8:30 to 9:30 to observe where the highs and lows are forming on the 15-minute or the 5-minute chart. Either you'll have a prevailing uptrend or a prevailing downtrend. You need to be able to identify this. You need to get your eyes used to this. That's it. Once you go down to the lower time frame, once you see the swing low in an uptrend being purged, you wait for one of these things to happen. Either a bearish fair value gap to get inverted on its own on a standalone basis after the lows have been purged, or you wait for a swing high inside of a fair value gap, a bearish fair value gap, to get taken out with a bullish fair value gap. You either trade an inverted fair value gap long here. If this fair value gap gets inverted without a swing high getting taken out, you enter long immediately with stops below here, the lowest low, or you enter long at the bullish fair value gap that forms after a short-term high gets taken out inside of the bearish fair value gap. If you're not familiar with what a fair value gap is, I'm going to demonstrate that later when the chart shows up. Don't worry about it. Stay patient. Remain in the video, please. This is for bullish continuation. For a bearish continuation, if you see a swing high of a prevailing downtrend get purged on the 15 or 5-minute chart, on a lower time frame, you wait for either this bullish fair value gap or a buy side imbalance to get inverted or close below to enter immediately, or you wait for a short-term low that forms inside of this bullish fair value gap to get taken out with a bearish fair value gap, like this red rectangle right here. And you enter short at the bearish fair value gap, stops above the swing high, and you target the lows. This is all there is. It is trend continuation. This is the only way anybody can ever make money trading. There's another detail you need to know about: the time of day. You need to mark out the Asia range, as mentioned here in this X post that I have here, 8 p.m. to midnight, 2 a.m. to 5 a.m. These are London range. And this is the time that is important if you're trading the indices, 8:30 to 11 a.m. That's the time when you sit down to observe the charts. And you look for this kind of a pattern. You trade long if this kind of a pattern shows up within this time frame, preferably after 9:30 open. But you need to be cognizant of whether or not there's a 10 a.m. news release. I'll get to that later. You trade bearish if you see this kind of a pattern form, preferably after 9:30 in the morning, New York time. Let's go to the chart. You see, this is the chart of the Nasdaq or NQ September contract. Let's remove the drawings for now. See, you don't need to worry about the indicator, but this is the 15-minute chart of the Nasdaq. If you pay attention right here, this is the 8:30 mark. Prior to 8:30 news release, the Nasdaq on its own was in a tight range. However, if you pay attention with context from the previous day, that is today's Thursday, September 4th, yesterday, that was 3rd of September, Nasdaq started an uptrend on the 15-minute chart. It was making higher highs and higher lows. After this high formed, I'm not going to take this into account because this is a high, but it's not much further. This low had not been taken out, and price had remained in a tight range. So if it's a consolidating market, I'm not going to take these smaller lows into account, right? This is the main low that I'm going to identify ahead of time because this is the more obvious move higher, and it's still in an uptrend, not a downtrend, as visible over here. From here to here, from Wednesday open till Thursday's AM session, today's AM session, Nasdaq had moved higher. So the prevailing assumption is that we're in an uptrend. So I marked out this significant swing low, which is the low of the Asia session, as sell stops. During the AM session after 9:30, the markets purged these sell stops. Notice that I'm not taking this low or any of these lows into account. I'm marking out this low because this was the only low that was clean. All the sideways action, I'm not concerned with it. It has to be a clean up move or a down move. In this case, it's an up move. So on the 15-minute, we see a clear swing low that is being purging low during the AM session after 9:30 futures open. This is 9:30 futures open. Price purges the Asia low. You go down to the 5-minute time frame. See, there's a fair value gap right here. Let's remove this line. Right here, you can see there's a fair value gap that gets inverted. If you want, you can enter right here when this candle closes above here, which stops below the swing low, or you could keep it at halfway inside the wick, entirely up to you, and aim for the high. This is an IFVG entry using the same logic, or you could go down further lower time frames. On the 4-minute time frame, same logic, fair value gap gets inverted right here. Also, a short-term high is getting taken out here with a bullish fair value gap. A bearish fair value gap gets inverted and a bullish fair value gap forms. 4-minute, 3-minute. On the 3-minute time frame, you see this is a bearish fair value gap right here. Let's mark it out in red to signify that this is a bearish fair value gap. Right here, this is your bullish fair value gap. Here, you have model 2022. ICT taught this in his 2022 mentorship. This is what we call shift in structure or market structure shift. This is your buy side imbalance, sell side inefficiency. And if you want to go into the details, these green candles would be called a bullish breaker, but that's not important. On the 3-minute time frame, you can enter right here, stops below here, and you aim for the high. It's that simple. That's all there is to trading. This is all there is to trading. So let's say this is long. I'm going to show you a short example just like this. Back to the 15-minute chart. This is Thursday's price action. We go down to Tuesday, which was 2 days ago. On the 15-minute chart, before 8:30, you notice that we're in a bearish downtrend. Right. Unfortunately, none of the swing highs has been taken out on the 15-minute, but let's go down to the 5-minute. On the 5-minute, we have a very significant high that got taken out. This is 7 a.m. high. The 7 a.m. to 8:30 a.m. is called the pre-market session range. It's not mentioned here, but this is something that ICT had taught in his 2022 mentorship or perhaps later. I don't remember, but it's not important. The 7 a.m. to 8:30 a.m. range is quite important. You need to mark this out. These are smooth highs as well, and there are fair value gaps above it. So you can see here, this is a swing high. Even though it doesn't look very important, this is kind of important because of the time aspect of it. Time and price, both are important. So mark this out, 7 a.m. to 8:30 a.m. because this is the first half of what we call New York AM kill zone. So on Tuesday, price went right up to here, took out this high. What do we have here? This is a bullish fair value gap. You can say it got inverted. So we have an inverted fair value gap, IFVG. You can enter short right at this candle. Or you can wait for one of these two bearish fair value gaps to get filled. This is your shift in structure, bearish, because this is a short-term low that got taken out. In a prevailing bearish trend, highs get purged during the AM session after 9:30 open. This is 9:30 futures open. It went above this high. This was the nearest swing high. Got taken out. Shift in structure, bearish. You can mark this here. This is your model 2022 entry short. You enter here, stops above the 3-candle formation. This is the first candle, second candle, third candle. Stops above here. Aim for either the low of this or whatever. You could aim for a 2-to-1, let's say. You got filled, luckily. In this particular case, you'd have to notice that we have something called smart money technique divergence, where the Nasdaq failed to take out the low. Let's remove this. This is S&P with ES. ES made a lower low, but NQ didn't. ES is the S&P 500. NASDAQ is, well, the NASDAQ. NQ is NASDAQ. If you see a swing low forming and the S&P 500 has made lower lows while you're short, maybe it's a good idea for you to either move stops or take partials. There's a chance it won't get reached, and that's okay. You won't always get the exact swing highs and swing lows for your targets, but this is still a good trade, and that's all you need to be profitable. And this is it. This is all there is to being profitable as a trader. This is pretty much all there is to trading profitably. If you can't follow this, you can spend an eternity following different scammers and watch thousands of ICT videos and still remain unprofitable. Rewatch this video until you get it. I can guarantee it to you, with time, you will figure it out and you will be profitable. Until next time, good luck and good trading.